Thing number four, Gary, we're moving to China. Thing number four is China throws liquidity at its banking sector.
All right. So, one of the things we've complained about here in the US with good reason is the ties between the large banks here and the government, right? This whole too big to fail idea, which Rob, I despise. But these banks got bailed out in 2008. People were understandably, reasonably angry about it. There was a mini bank bailout a year ago when we had a few medium, large size banks fail here in the US. And it's an issue. Now, China, they do the same thing, but they don't have the same issue with it. The Chinese banking system is over leveraged. They are hugely exposed to real estate. That market hasn't been good. And so the banks have had trouble. The People's Bank of China just injected over $100 billion into their banking system. It's the highest liquidity level since February 2024. And the reason they did that is because 40 Chinese banks, pardon me, have collapsed recently. So the banks some of them are going out of business. Some of them are facing bad loans. Some of them have declining profits. And so the People's Bank of China just threw a massive amount of liquidity into the system.
Lynn Alden, Gary, who I know work closely with, or you guys share a lot of same sentiments, trade work back and forth, and highly respected by you. She was on a recent show called Macro Voices and talked about China's housing market, consumer consumption, the weaknesses that are there, despite strong industrial production. One of the things she also pointed out was this kind of echoes Japan's disinflationary period. What does that mean? Is China on a similar path to what we're seeing in Japan as well?
That's a great question, Rob. And you're right. I have an enormous amount of respect for Lynn Alden. She's a first class person and does incredible work. One area in particular where Lynn's work is really strong is she has a great handle on economic history. And so when you read her work, she will often compare things that are happening now to things that were happening 80 years ago or 100 years ago, or across different countries. And in this case, she did talk about how China's weaknesses in housing and consumer consumption, despite the fact that they have a lot of industrial production, that echoes Japan's disinflationary period. So that's something we've talked about a lot here. Japan had that issue for, I don't know, something like 30 years, maybe a little bit longer, where you had highly indebted private debt bubbles. And that led to a rotation from the private sector to the public sector. And, the government basically propped things up. Now, where Japan is at the moment, is they did so much of this that the government's taken on a massive amount of debt. And now the Japanese government is stuck in a situation where either they have to raise interest rates, which they can't afford to do because they've taken on so much debt, or they don't raise interest rates, which is a problem for them because the yen has been collapsing. Now, I actually don't know if Lynn has made a prediction on China's currency, on the yuan. But you know, the thing that she's pointing out is this led to some problems in Japan. China may be heading in that direction. It'll be interesting to see what happens. Generally, when Lynn is doing these kinds of comparisons and predictions, it's a good idea to take it seriously.